Well, joining me now is Barclays Chief UK Economist Jack Meaning, who's also a former economic advisor to the Bank of England's Chief Economist. Jack, good to see you this morning. Any doubt in your mind that we'll get anything other than the bank keeping rates on hold?
I mean, there's always a chance, Ian, but I think really it would be a shock to us and to the market if there was a cut. Today, as you kind of said in the intro, the story today is all about the signal they send about where rates are going in future meetings. So we'll be picking over what they do and what they say to try and see if we can find any clues as to when that first interest rate cut is coming.
Now, last time around, of course, the MPC voted 8-1 to keep bank rate unchanged. Is there a chance that you might get a few more people straying into the Doves camp this time around?
Well, we think probably that you stay around the 1.8. There's a lot of value to the MPC members to wait and just see a little bit more data. So between May and June, they'll see a little bit more data on what's happening to jobs and wages, and a little bit more on inflation. And we think probably that means they just sit and wait and hold a little bit more. But there is absolutely a chance that we see maybe one or even two more MPC members moving themselves over into that camp to vote for cuts already.
I mean, you mentioned inflation there. Obviously, we get the quarterly inflation report today, the latest forecasts from the bank. I mean, those forecasts on inflation will really need adjusting, won't they?
Yeah, so there's a few things going on in the forecasts, and it's always quite interesting to see and to try and understand how the MPC are thinking about things. I mean, one of the really interesting dynamics we've got this time is that market pricing, so kind of people betting on when rates are going to move, they've moved quite a lot since the last forecast. So then people were expecting that they would cut interest rates 5 times this year. Now people are only expecting 2 cuts this year. And that will have an impact on where inflation goes. It will push down on inflation. So our analysis here, the modelling we've done at Barclays, suggests that actually that will lower their inflation forecast by about 0.2% in the kind of the more medium term, which means that actually they'll probably end the forecast with inflation too low, as opposed to the problem we've had for the last few years, where inflation's been too high.
And of course, as recently as February this year, they were still predicting that inflation would only hit target in 2027. I mean, we've obviously had this big review lately of the bank's forecasting. I mean, that's Exhibit A, really, for saying how they can get it wrong at times.
Yeah, I mean, all four some things that are just unforeseeable, shocks that hit the system. So we've seen the kind of the pandemic in recent years. We've seen kind of war break out, and we've seen supply chain issues. All of those things are incredibly hard to predict, but it's really important now that as things stabilise a little bit more in the global economy, the bank starts to use that forward going, not where it is when it's formulating policy.
Now, obviously, we get the governor speaking at 12:30. I mean, I've got the sense from some of his recent public pronouncements that he's really itching to cut interest rates. What sort of forward guidance do you think we might get from Andrew Bailey this lunchtime?
I mean, we're looking for guidance from the report itself and from the governor when he speaks to suggest that actually, if things turn out the way they're forecasting them to, that actually they will start to cut interest rates in the coming meetings. So we think they'll start cutting interest rates most likely from June. And it would be great now for them to give a bit of guidance to markets to kind of say, yes, you're right to expect that cuts are coming, conditional, obviously, on the fact that the data turns out the way they're expecting it to. And there's always uncertainty in forecasting, as I said. So they'll reserve that right to change their mind if the data gives them a big surprise. But, you know, you alluded to it in the intro. There's going to be a very different picture in terms of inflation at or below target by the time they get to their June meeting. And in terms of where core inflation is and services inflation are, all of those point to the fact that, you know, they should have confidence if that transpires, that they can start cutting rates in June, and we'd expect them to say as much in this report.
Do you think the MPC has been overly obsessed with wage inflation figure, which is obviously right now 3 times the bank's target rate?
Yeah, I mean, so the bank officially doesn't have any target for wages. What they're trying to work out is what level of wage growth helps them get their inflation target. And that's a really important input at the moment, because a large part of kind of companies' costs are wages, and we've seen wages stay strong. And companies have got 2 options then. They either absorb it into their margins, which we have some evidence that some of them are doing, or they pass it on, and that pushes up prices. So, you know, what the bank will be viewing is, okay, if wages come down, if they have confidence that wages are coming down, then that will give them a little bit more confidence that inflation is going to follow. And so you can see why they're focusing on it a lot. It's key to the question at the moment. But really, what they should be thinking about is where wages are going, not necessarily the level they're at now. And our work here again at Barclays, kind of looking at those more forward-looking metrics, suggests that actually, as inflation comes down, as unemployment starts to tick up a little bit, we should see wages slow pretty quickly from where they are.
So in other words, then, the bank wants to ease monetary policy, but still keep it reasonably restrictive, given the inflationary pressures in the system.
That's exactly it. You hear the chief economist, Hugh Peel, kind of putting it in exactly those terms. So he talks about the fact that they need to squeeze out the last bit of that stubborn, persistent inflationary pressure. But they are relatively confident on their own estimates that they've got scope to be able to reduce interest rates from here and still have them weighing on the economy, still have policy restrictive. So, 5.25%, where bank rate is at the moment, is not necessarily the same as the only way you can be restrictive. You could cut from here and still have a little bit of a squeeze of inflationary pressure out of the system by keeping rates, higher than neutral.
OK, Jack, got to leave it there. Busy day for you. Do appreciate you sparing the time to chat today. Thank you.
Pleasure.
Some other business news stories for you now. And Sabadell, the parent of TSB, has received a hostile takeover approach from its larger rival BBVA, valuing it at 12.23 billion euros. Well, the move from BBVA, Spain's second largest lender, comes after a series of approaches to Sabadell. The most recent of these was rejected on Monday, at which point BBVA decided to approach Sabadell's shareholders directly. Well, Sabadell, Spain's fourth largest bank, is yet to respond to the latest move from its rival, but the Spanish government has today said a takeover would lead to excessive consolidation in the sector. The FTSE 250 engineering services company Wood Group said this morning that it continues to expect earnings growth in the high single digits this year, despite reporting a 6% drop in sales during the first 3 months of 2024. It blamed this on a lower order book during the period for its projects division and the phasing of work in its technical consulting and energy asset development businesses. Well, the news comes a day after Wood, which employs more than 35,000 people worldwide, said it had rejected a £1.42 billion takeover approach from the Middle Eastern engineering and consulting group Sidara. Broadcaster ITV this morning blamed the lingering impact of the recent US actors and writers strikes for a drop in sales during the first 3 months of the year at its studios arm. ITV Studios suffered a 16% fall in sales during the period to £382 million, which it also blamed on weaker demand from free-to-air broadcasters in Europe, which it said had been holding back on spending until they saw more certainty in the advertising market. Meanwhile, advertising revenues in the period rose by 3%, with ITV predicting a 12% improvement during the current quarter once the European Football Championships get underway in June. The shares are currently ahead by 2%. Well, still to come here on Business Live, we'll have more business updates for you and a look at how the markets are faring this morning. The FTSE has hit another intraday record today. Stay with us.
As you say, it is not the typical dream for a teenage girl. I think the simplest explanation is that I was a really naughty teenager. I got myself in a lot of trouble and I earned myself a reputation. And for years, I fought between trying to live up to that reputation and trying to lose that reputation. And it wasn't until this incredible teacher came along and he saw something in me and he decided to fight for me. And it was him fighting for me that sort of redefined something in me. It made me not someone that everyone had given up on, but someone was worth fighting for. The sort of violent and chaotic and hectic side to prison life is really well documented. And that was a big reason why I wrote The Prison Officer, because I really wanted to share the bits in between that and the conversations that I had with people, the incredibly ordinary and interesting conversations that I had with prisoners. I think one of my favourite examples of that was a man called Domingo, who was an infamous drill artist, was heavily gang involved, and he arrived on the wing, and I probably had similar expectations of him as anyone else would. He sang violent lyrics about the crimes that he committed, and what I actually found with him is that we ended up talking for hours on end about philosophy and horoscopes. He was fascinated in them. I really hope that my book tells the different side to prison that makes people interested in joining the service, because I loved it as a job. And you talk about more training, but no amount of sitting in a classroom can prepare you for stepping onto that wing. And in the early days of my book, I speak about my first experiences on the wing, and I've got no idea what's going on. I feel so watched, partly because that's the way that a prison wing is laid out, and partly because those prisoners are watching you for every move. They're trying to figure out what type of person you are. I ended up catching tuberculosis whilst I was a prison officer. Unfortunately, infectious diseases are rife in prison because lots of people living in cramped conditions is a perfect storm for that kind of thing. And I became really ill, and I ended up spending a year recovering from tuberculosis. And I think that that's an interesting thing that people often don't think about. When you lose your liberty, you also often lose your right to health.
Welcome back. Watches of Switzerland has bought the Italian jewellery brand Roberto Coin for £104 million. The UK's biggest retailer of Rolex watches said the move would enable it to build on its proven retail expertise in luxury branded jewellery, which it said had consistently outperformed the wider jewellery sector. Well, Roberto Coin, which is based in Vicenza, Italy's jewellery capital, was founded in 1977. It's the sixth largest jewellery brand in the United States by retail sales and is best known for its extensive use of rubies. BAE Systems said today it was aiming to hire a record 2,700 new apprentices, graduates and undergraduates in the UK this year. Britain's biggest defence contractor said it was investing in its people, facilities and technology in view of its growth outlook, which was supported by increased defence spending by governments around the world. It said its spending on research and development would rise this year, with investments in high technology areas such as electronic warfare, autonomy, laser-directed weapons, counter-unmanned aerial systems, synthetic training, electrification applications and space solutions. I can tell you BAE shares have hit a record high this morning. Well, last night's mixed session on Wall Street, during which the S&P 500 broke a four-day winning streak, was followed by mixed trade for equities in the Asia-Pacific region. You can see the Nikkei in the top left-hand corner. That was trading higher earlier on in the session, but ended up a third of 1% lower. Sydney off by more than 1%. Well, in Europe, this is how stocks are trading at the moment. Mixed picture again. Sabadell shares, which I mentioned earlier, they're up 3.25% in Madrid after that takeover approach from BBVA. An approach, of course, first reported by my colleague Mark Kleinman. Meanwhile, here in London, the FTSE 100 has hit another record intraday high this morning. Currently, the market up just over 0.1% higher. The leading faller this morning is Airtel Africa. That's off by 9% after it reported a quarterly loss, while the private equity firm 3i, that's off 4.75%. Bit of a stock market darling of late, but this morning it reported a full-year decline in total returns. As ever on a Thursday at this time of year, a number of stocks have gone ex-dividend. In other words, they're trading for the first time without rights to the latest payout. Those going ex-div today include HSBC and Admiral. That's if you own those stocks, don't worry about that. That's just because they've gone ex-dividend today. But that big move in HSBC has been enough to take 8 points off the FTSE on its own. It's an automatic adjustment. Outside the FTSE 100, the North Sea oil producer Harbour Energy is leading gainers after a well-received trading update. That one's currently by some 5.25%. Meanwhile, over on the foreign exchange markets, obviously all eyes on the Bank of England this lunchtime. Sterling more or less unchanged right now against both the dollar and the euro. The oil price, though, has been moving higher today. That's on the news of a surprise drop in US crude inventories. A barrel of Brent crude is currently changing hands at $84.24 a barrel. That's up 0.4% on the session. Well, with me in the studio this morning is Rachel Winter, partner, of course, at Killick & Co. Rachel, good to see you this morning. We should probably start with BAE. A safety as she goes statement, but the market seems to have quite liked it.
Yeah, it does. I think it's a very reassuring update. No major surprises there. They're expecting revenue to be up by 10 to 12% over the course of this year. Profits will be up by a bit less, and that's because they're investing so much in expanding capacity. There's been a huge amount of demand for defence over the last couple of years. That's led to a big order backlog at BAE, and therefore not surprising to see them investing more in trying to meet that demand.
What I thought was interesting is that in the statement they mentioned the fact that the UK is raising defence spending to 2.5% of GDP. Is the market maybe missing a trick here? I mean, if one casts one's mind back to the end of the Cold War, defence spending as a proportion of GDP was significantly higher back then. Is there a chance that governments, particularly in Europe, may have to go higher than that?
I think possibly. So if we look back over the last decade, a lot of countries within NATO have been supposed to be spending 2% of GDP on defence, and most of them haven't been doing that. Germany, for example, has been spending less than 1% for some of those years. So I think governments around the world and in the EU are really looking to increase their defence spending. And I also think we've seen a change in attitudes from investors about buying defence shares. I think before Russia invaded Ukraine, I had a lot of clients saying, I don't want to have defence in my portfolio. But now they've almost seen the positive side of defence. And I've had a lot of clients coming back and saying, I'm now happy to have it in my portfolio. And perhaps that's a reason why the shares have tripled since 2020.
Yeah, very well-run business as well by Charles Woodburn. Outside the FTSE, Harbour Energy has grabbed the garlands today.
Yeah, so this is the biggest energy or oil producer in the UK. They're very exposed to the North Sea. They have announced a small increase to the dividend this morning, so I think that has been the reason why the shares are up so much. I think this company has been a very vocal opponent of the windfall tax. And actually, in the update today, they did confirm that their acquisition of a German company called Winterthur is going ahead and should complete in the fourth quarter of this year. And I think probably the reason why they're going ahead with that acquisition is to try and get more exposure to other countries and therefore less exposure to the UK's windfall tax. So I think that's probably an unintended consequence of this tax here in the UK.
Yeah, the time they announced that deal, they referred to it as transformative, which often gets investors reaching for the smelling salts. But I mean, this one genuinely is transformative, isn't it?
I think it will be, yes. And with regard to the UK's windfall tax, we may end up with a Labour government here in the UK later this year, and it may be that they will make some changes to that windfall tax, either for better or for worse. So we'll have to see what happens there.
Yeah, now we also heard today from ITV. I mean, on the face of it, it wasn't a great trading update, but the share price has reacted positively.
Yeah, so they've reiterated guidance for the full year, which is a good thing. They have experienced some delays because of these Hollywood strikes, so that means that more revenue will be occurring in the second half of the year. What I thought was quite good was the advertising revenue. So ITV has really been struggling to replace its traditional TV advertising revenue with advertising revenue from streaming. But actually in the results today, they did announce an overall increase in total advertising revenue. So not a massive increase, but just to see an increase at all, I thought was a good thing. So I think that's probably one reason why the shares are up a bit this morning.
And briefly, we also heard from Balfour Beatty today. What do you make of what I had there?
We did, yeah. Again, no major surprises here, but overall a reassuring trading update. They have said they have got a number of very large projects that are proceeding on budget and on time, which is good to hear. They are involved with things like electricity transmission projects and in carbon capture. So I think they are involved with projects the government is supporting in terms of reducing the overall carbon emissions here in the UK. So I think they're well placed for the future.
How much of their business is accounted for by the UK now?
It's about 50%, and they are quite exposed to the US as well.
All right, Rachel, good to see you as ever. Thanks for joining me this morning.
Thank you.
That's it from me. I'll be back with our afternoon edition at 4:30, but stay tuned because in just a few moments there's that Bank of England rate decision and I will be helping you take you through that with Jane Secker. Stay tuned.